it's 10 o'clock, so let's go ahead and get started. Good morning, everyone. Thank you so much for joining us. I'm Amanda Gerber, Marketing Director with DWD. I just wanted to take a moment to remind everyone that this meeting is intended to be interactive. So if you have a question, feel free to submit questions using the Zoom Q&A feature at the bottom. Before we get started today, I wanted to introduce members of our nonprofit team who will also be panelists during this meeting. Our panelists will be helping to answer some questions, and they will also be helping with the Q&A feature using Zoom. Carrie Minnick, Susan Berghoff, and Tyson Moore. These three individuals devote all of their time here at DWD to working with nonprofit organizations. Carrie has been a CPA for almost 18 years and has spent the last 16 years of her career devoting her time strictly to nonprofits. Susan joined our firm back in 1999 and has spent the last 18 years of her career working on nonprofits as well. Tyson Moore is the newest member of our team and has been with the firm for a little over 3 years. Prior to joining DWD, he spent several years working for the United Way here in Allen County. At this time, I'm going to turn it over to get started with Carrie.
Thanks, Amanda. As Amanda said, this is meant to be interactive. So if you have questions, please feel free to put them in either the Q&A box or the chat window, and we'll be happy to answer those as we go. We will hopefully have a few minutes at the end of the session as well to answer any additional questions. I know many of you we've worked with for many years, so thank you. And then also we do have some new people with us. So thank you for taking time out of your day to spend with us. We are going to go over 9 items that are kind of year-end wrap-up items that every nonprofit organization should consider. Now, some of these items are specific to December year-end, like as a calendar year-end, while others you would be doing at the end of your fiscal year. So maybe if you're a June year-end or a March year-end, you may need to do some of these at that time versus the calendar year. But many of these apply to all nonprofit organizations. So the first one is send a thank you letter to your donors. Obviously, we want to let our donors know that we appreciate them. So many organizations send thank you letters to their donors throughout the year, whether it be monthly or as soon as they receive a donation, which is perfectly fine. But you just want to make sure by the end of the year, December 31st, that you do send out those thank you letters to your donors. This is because donors, individuals, need to have written documentation to support any contributions that they are going to take as tax deductions on their own personal tax return, specifically for $250 or more. But it's just best practices that all nonprofits just give a thank you letter or some kind of written documentation for all contributions made. Now, there are some requirements that must be included in this written documentation in order for it to be sufficient. First of all, it needs to be contemporaneous, which means that you need to provide this written documentation to your donors before they file their tax return for the year. So April 15th is really the drop dead deadline, but it's just best to do it before the end of the calendar year. In addition, the written documentation needs to have the nonprofit's name, the date of the contribution, the amount of cash, and a description, but not the value of any property contributed. So cash is easy, or check, thank you for the donation of $500 on September 15th, easy. However, if someone were to donate in-kind goods, maybe books or supplies, you would not put a dollar value on it. That is their responsibility for the value. You would just simply state, thank you for the office supplies that were donated on X date, or the books. You would just give a description of what was donated. You also need to include a statement whether the organization provided any goods or services in return for the contribution. So if most of the time nothing is received, so you would just say no goods or services were received in return. However, if there was goods and services were provided, you would need to provide a value of these items. So for example, if you had your year-end fundraiser and you sold tickets for $100, and of the $100, the individual went to a dinner and they received a dinner valued at $25, then the $75 would be considered a contribution. So in the thank you letter, you would need to note that $25 is the exchange portion that they received in return. And the $75 for a quid pro quo, that is basically what I just talked about. When you do receive something in return, the requirement for providing documentation is $75. So if an organization just receives straight out contribution, nothing is received in return to the donor, then the requirement is $250. However, if the donor receives something in return, then the requirement is $75. There is a penalty if you do not do this. The penalty is $10 per contribution, a maximum of $5,000 per fundraising event or mailing if you fail to make this disclosure. So we just want to make sure that we are providing our donors with the documentation that they need. This also might be a little bit more important this year because this year there is an above the line $300 contribution deduction on individuals' tax returns. So you may receive a little bit more contributions this year. So you just want to make sure you remember to do that.
Carrie?
Yes.
I'd like to just add that if I know I've had a number of people ask me in the past for some sample wording that you would do on the thank you letters, and there's a IRS publication out there that has a couple of examples of written acknowledgements. It's publication 1771. And I thought I'd put the link to that particular publication in the chat to see if anybody wanted to read up more on this exciting topic.
Great. Yes. Thank you. Next is collect information for 1099s. So this is related to the calendar year. So if you pay individuals or companies for $600 or more for services that are not incorporated, then we have to issue a 1099. So similar to a W-2 that we issue to employees, this is a 1099 for people that are not employees. If you pay them $600 or more during the year for services provided to your organization, you have to issue them a 1099, and then they would record this on their tax return. There are some exceptions to this. For example, corporations. So if an organization or a company that you're paying has an Inc. after its name, it's a corporation, it's incorporated, you do not need to send them a 1099. For example, DWD, if we provide you services such as preparing a 990 or doing an audit or a review, normally you would provide us with a 1099. However, we are incorporated as a corporation, so you would not be required to provide us with a 1099. Payments for attorneys must always be reported on 1099s, even if they are a corporation. So the IRS always wants to know payments to attorneys. This year, the IRS has decided to introduce a new form, and it's called the 1099 NEC, which is called non-employee contribution. So in the past, all of these payments have been recorded on a 1099 miscellaneous, MICS. However, this year we've added a new form, the NEC, and so it splits those. So some items that used to be recorded on the MISC will now be on the NEC. So there is some additional instructions on the IRS website as to who should go on or what type of payment should go on each form. Basically, non-employee compensation goes on the NEC, other miscellaneous payments go on the MISC. But you do want to make sure that you have prepared those. And let's see what else. They are due with the IRS by March 1st if you file these on paper. However, if you file them electronically, you must file them by March 31st with the IRS. The NEC, the new form, needs to be filed by February 1st, and that is either paper or electronic form. And then you also need to provide a copy to the recipients by January 31st of both of those. And if you don't file these properly by the due date, there is a fee there. So we want to make sure that we're filing all of those properly. And one way to really make sure that you have the correct information for filing these forms is to require a Form W-9 be completed by each of these people that you pay during the year. The Form W-9 requests their basic information, the person that you're paying, their name, their address, their social security number, or EIN if they're a company, because you will need to have all of that information in order to put on the 1099 at the end of the year. So it's better to get that information during the year. A lot of people, best practices is that you have the person fill out the W-9 before you pay them. So that way you make sure you have the information, as opposed to waiting till the end of the year and trying to scramble to get that information. So again, this is a end of the year, calendar year, making sure that we file the 1099s.
So Carrie, when it comes to attorneys, is that limited to $600 as well?
No, payments to attorneys is not limited to $600. The $600 limit is non-attorney. So all payments to attorneys need to be reported on the 1099, correct?
I believe so.
All right. The next tip is to make sure that we prepare our W-2s and other annual payroll returns. So we've already just talked about the 1099s that go to the individuals and companies that are not employees. So now let's talk about our employees. So
Carrie, can I interrupt you for a second?
Sure.
I have a question about the last slide that you had.
Yeah.
As far as 1099s go. So the question, Sheila asked a question, what do you do if you've paid someone, but they won't return a W-9 request?
You know, that's a difficult question because you can't make them do it. You've done your part in requesting it. I know that I have had a client in the past where they just could not get the information they couldn't get the social security number from the individual. They had the employee's name, obviously the amount that they paid and the address. So they had that information. So they were able to file the 1099. They just left the social security number off. However, they did, I believe, receive a notification after that was filed that they had filed it incomplete. So I don't know what the best answer is for that. So we can definitely look into that a little bit more, but you know, we need to file that 1099 and we need to file it properly. So we need to make sure that we have all that information. And that's why a lot of people prefer to have them fill out the W-9 before they pay them, because it kind of gives them some leverage to making sure that they get that information. But we can look into that a little bit more as far as what your responsibilities are as the company preparing the 1099s if you can't get that information. Susan, is there anything else you can think of for that?
No, I think that there's some rules about withholding and stuff like that, but I don't know what it is off the top of my head. So we will look into that and get back with you on that.
I do know that happens. And again, that's kind of why they say make them fill out the form before they get the payment, because it gives them a little incentive to fill out the form.
I have another question. Says in the past, I've sent thank you letters with yearly contributions out in January. Did you say it was due to be sent by December 31st? And what about giving that the post, and would it be okay to postmark it prior, or is it okay to have it postmarked afterwards?
No, that's fine to send the thank you letters out in January. It just must be received by the filing date of the donor's tax return for the year of the donation. So in a normal year, 1040s are due April 15th. So really the April 15th deadline is really when you is the deadline that you're looking for. On that, it's just kind of much easier to do it year end as you're wrapping up the year by December 31st. So if you do it in January, that's perfectly fine. Good questions. So back to the W-2s for our employees. So if you have an employee or employees, we have to file some annual returns. Obviously the 1099 that we talked about, but then also the WH-3, which is the annual withholding tax form. So during the year, as an employer, we withhold state and county income tax from employees. And so at the end of the year, we have to file the WH-3 that shows a reconciliation of what we have withheld during the year and paid during the year. And then the W-2 obviously is when we're paying for services that people provide to our organization. We have to report that on the W-2. There are specific copies that must be filed with the IRS, the Social Security Administration, and the state for the W-2. And we also have to provide a copy of the W-2 to each of the employees. So we want to make sure that we do those properly. And while we're talking about employees here, one of the big concerns that the IRS has is independent contractors. So sometimes organizations will treat an employee as an independent contractor and will not properly withhold payroll taxes. And the IRS does not like that because obviously they're not getting the proper taxes remitted to them. So when you're bringing on a new person and classifying them as an employee versus an independent contractor, there's a couple things that we want to look at to make sure that we have them classified correctly. The first is the behavioral control. How much control does the organization have over the individual on when they're doing their work? Are there specific instructions? Are you saying that the person has to show up Monday through Friday, 8 to 5 and do this work? Then they're probably more of an employee. Or are you saying this is a project that needs to be done by this date? Just as long as you get it done by this date, we're good. So that's more of an independent contractor because there's a little less control over the work being done. Another aspect to look at is financial control. Does the organization control the business aspects of the individual's job? And then finally, the relationship. What is the type of relationship that exists between the organization and the individual? If the individual is receiving benefits like retirement, insurance, then they're probably considered an employee. Also, if you're doing like employee evaluations for this person, yet that you're considering them an independent contractor, they're probably not truly an independent contractor. And you also want to make sure that what is the written contract between the individual and the organization say? Is it an employment contract or is it an independent contractor contract? So just making sure that when you do hire on new individuals that they are properly classified as an employee or an independent contractor, and you can have independent contractors, that's perfectly fine. But the concern is that you are classifying people as independent contractor when they are truly an employee. And then you would not be withholding the proper payroll taxes and not remitting the proper payroll taxes to the IRS. And we don't want to get in trouble for that. So just remember that aspect for if you have employees.
All right, I'll start with W-4s. So as many of you may know, there was a new W-4 issued to be used in 2020. I'm going to talk about what's changed and why the changes were made. So all new employees hired after 2019 or employees hired prior to 2020 who want to adjust their withholdings from paychecks dated 1/1/2020 or later must use the new form. So the new W-4 was created due to changes in the Tax Cuts and Jobs Act, which increased the standard deduction, eliminated personal exemptions, and caused many individuals to not be able to itemize on their 1040. The new form helps to more accurately calculate an employee's withholdings. Instead of being based on allowances, the new W-4 considers multiple jobs, the number of dependents you might have, other income and deductions, as well as tax credits that you might receive. So there's positives and negatives to the new W-4. On the negative side, it does take a little bit longer to prepare. And it's a little bit more complex if you have a more complex tax return or if you have more than one job. But on the positive side, it's much more accurate than it has been in the past. Employees should complete a new W-4 for significant life changes, like a change in marital status, a new child, or a change in a spouse's job. Luckily, the IRS has a withholding estimator. They just created this tool, and it helps employees fill out the new W-4. This tool will analyze your situation, and it predicts what your tax refund will be at the end of the year. To use the estimator tool, you're going to need your prior year's 1040, your most recent pay stub, and it takes about 10 or 15 minutes to fill out the estimator. For anyone interested, we will link that estimator tool in the chat here shortly. And that's all I have on W-4s. So if there's no questions, I'll move on to 990s. Reminder that we will take questions at the very end of the presentation, so you can ask questions anytime throughout. So on 990s, non-for-profit organizations are tax exempt and they don't require a tax return. However, the IRS still wants information on the not-for-profits programs and activities, and therefore requires nonprofits to file an informational return. Churches and certain church-related organizations are not required to file information returns, but most tax-exempt organizations are required to file. So there's three types of 990s. There's a 990N, a 990EZ, and then the full 990, each one requiring a little bit more information. I'll start by talking about the 990N. It's the easiest form to fill out. It's called a postcard because it's smaller than the rest of them. It's for organizations with gross receipts that are normally less than or equal to $50,000. In IRC Section 527 organizations and Section 509A3 supporting organizations are not eligible to file Form 990N. These organizations would need to file either a 990EZ or the full 990. The 990N must be filed electronically. It asks for your annual tax year. There are check boxes asking if your organization was terminated during the year. There's also a checkbox asking if your gross receipts are normally less than $50,000. It also requires to put the organization's name, address, the employer identification number, a website if you do have one, and the name and address of your principal officer. You're not actually required to put any of your financial information on the 990N. You just need to certify with that checkbox that you normally receive less than $50,000. The next step up, which is a pretty big step up in information, is the 990EZ. This is for organizations with gross receipts less than $200,000 and total assets less than $500,000. This return includes information on the organization's exempt and other activities. It requires disclosure of your financial information. It talks about compliance with certain tax filings and compensation paid to certain people within your organization. It also could include additional schedules depending on your organization's activities throughout the year. And the last is the full 990. This is the biggest form. This is for organizations with gross receipts that are greater than $200,000 or total assets that are greater than $500,000. The full 990 includes all the information in the 990N, all the information that's required of the 990EZ, but also has additional questions about board activity, compliance, legal requirements, and also ethical questions. The full 990 focuses on transparency and encourages compliance within your organization. This could be the core return for a full 990 is 11 pages. It also could include up to 16 additional schedules based on activity within your organization. All three forms of the 990 are due on the 15th day of the 5th month after your organization's accounting period ends. So if you're December 31st year end, your return is going to be due May 15th. And if you're a 6/30 year end, your return will be due on November 15th. There is also a 6-month extension, and you can request this by filing Form 8868. One thing to note, that filing extension does not reflect negatively on your organization. It can even be a useful tool to allow your organization enough time to complete your 990. correctly. Because failure to complete your return by the end of the due date results in penalties of $20 per day, up to $10,000, or 5% of the organization's gross receipts for the year. And if your annual gross receipts exceed $1 million, the penalties are $100 per day, up to $50,000 per return. So the moral of the story here is make sure you get your 990 completed on time, because there can be some big penalties. Susan, do you have any questions there in chat?
No, I do not have any questions for you, but I would like to just bring up a point that even if you don't have to do a 990 as a church, if you have a tax exempt number from the state, you may still have to do an NP20, which is, you know, we sort of go along with the 990, but if you're a church and you don't do a 990, that still might be required.
That's a good point. Thank you, Susan. And if there's no other questions, I'll pass it back to Carrie. She'll talk about budgeting.
Thanks, Tyson. Next, if you haven't already done so, make sure you prepare a budget for next year. All nonprofit organizations should have a budget that identifies the expected revenue and expenses for the upcoming year. So oftentimes this is done prior to the year starting or a little bit earlier in the year, but if you haven't done it yet, make sure you have one for the next year. The budget is the plan that allows the organization to determine where its resources are coming from and what those resources are going to be used for. Oftentimes when an organization goes to prepare a budget, they're going to look at last year's activities and then see what type of changes are going to be made for the following year. For example, are there any programs that are going to be cut next year? Or are there going to be any programs that are going to be added? Has the organization lost any funding sources? Or are there going to be any new funding sources for the following year? How many individuals are you expecting to serve during the year? What's going to be different in the upcoming year from the previous year? And then based on those items, you're going to need to adjust your budget accordingly. Now, I know we're kind of in uncertain times right now. So usually a budget is done annually, but I do know some of the nonprofits that I work with currently are looking at their budget a little bit more often. Not only monthly when they compare year to date to budget, but they're actually reevaluating the budget quarterly just because of the so many unknowns with the pandemic that's going on and just being, just the uncertainties around everything that's going on. So I think in this time that we're going through, a budget is so important with what's coming up next. One other thing is that most organizations try to prepare a balanced budget where income equals expenses, which is great. However, sometimes a balanced budget is not appropriate. So just make sure that you understand that sometimes your budget might not be in balance. For example, healthy organizations require cash reserves. Sometimes an organization will need to increase its cash reserves or need additional cash to pay down. So for example, sometimes an organization may have had several years of excess revenue, and so they have built up a large cash reserve. So maybe this year for the budget, they are going to budget a loss because they're going to use some of the prior year reserves to cover those expenses. Or maybe they are going to give out some kind of additional pay raises or start new programs or start a new building capital campaign. So, as long as there's cash that's either in the current budget or in a reserve to cover those expenses, it's fine to have a negative budget. But just remember that you have to pay for that somehow. So if you have a budget and it's not balanced, that might be okay in some circumstances. Once the budget is prepared, it should be approved by the board of directors. And when they do that, they're really approving the resources for the year and what it's going to be used for. But make sure that once that budget is approved, that you're also continuing to look at it and monitor it monthly. It just doesn't go sit on a shelf somewhere and collect dust, because a budget is a plan for the year. And in order to follow the plan, we need to make sure that we're all aware of it and understand the assumptions behind it and compare it to what's actually going on to make sure that we're on track. The next item that we need to do is file any reports required by grantors. So let's say you get a grant from a local foundation and they require you, oftentimes they will require you to file a grant report that says what you did with the money, how you spent it, that type of thing. Now, this might not be a requirement for all of your grants, and it might not be annually, it might be during the grant period, but just make sure that you do understand when you get those grants, any type of reporting requirements that are required and that you are filing those. Yeah, there's not much else on that, just making sure that you're aware of the requirements related to any types of grants that you do receive. The next one is the E1. So I don't know of how many of you have actually heard of an E1 if you don't get government money. However, the Indiana State Board of Accounts is responsible for making sure for oversight over nonprofit organizations that receive government funds. So if your organization receives, and the E1 is specific to Indiana organizations. So if you're a nonprofit in Indiana and you get government money during the year, whether it be from the federal government, from the state government, or from the local government, you need to file a Form E1 with the State Board of Accounts. So the form must be filed within 60 days of the end of the year. And that is the end of the fiscal year. So if you're a junior end, it would be 60 days with end of the junior end. So what this does is it shows the state where you got your money from, and then they will determine if you have to have an audit done over these funds. Sometimes you don't have to have an audit done. Sometimes they will allow you to just submit your 990 instead, but they're the ones that just decide that, not you. So what you do is you go online to this E1 Indiana Gateway and fill out the form. It's going to ask you for different types of government funds that you've got. So there are 4 categories of government funds. A direct federal grant, which is when the federal government they give you a grant directly. A federal grant passed through the state or local government. So that is when the federal government issues a grant to the state agency, and then the state agency or local agency passes that on to you. The third type of government funds reported is a fee for service or a purchase of service agreements. That's when a government agency is going to reimburse your organization based on a specified per unit or per diem amount for services provided. And then finally, the fourth type is state and local, which is just money that you receive directly from the state or local government. So bottom line is, if you receive funds during the year from any local, state, or federal government agency, you need to go online and fill out this form.
Hey, Carrie.
Yes.
I've got a couple questions that have come in, the same question actually, and they want to know if the PPP loan would be required to go on the E1.
I would assume that it would, since it is a government money. I know that we're going to talk about uniform compliance audits in the PPP loans, and it does not apply underneath there. Susan, do you know for sure if it applies with the E1?
Well, the thing about the E1 is it is revenue based. So
That's
until
true.
that becomes revenue, then perhaps that is when it would go on the E1. But we'd have to get a little more information on that, I think.
Correct.
so we'll put that down as another question to look up.
So once you fill out the form, you'll receive an email from the State Board of Accounts notifying your organization as to whether they are required to have an audit or if the audit has been waived. So if an audit is needed, you'll be required to submit a copy of the auditor's contract to the State Board of Accounts for approval. So that's like the engagement letter. So when we do an audit for you, we provide you with an engagement letter that says what our responsibilities are and what your responsibilities are. And there's specific wording that goes in that engagement letter if you are required to have an audit done by the state. And so that's what they're talking about there. You just need to give them a copy of it so they can approve it prior to the audit being done. And then upon completion of the audit, you will also be required to notify the State Board of Accounts the date and time and location of the audit exit conference, and then submit a copy of the final audit report. So again, this is just the state oversight over government funds being received by nonprofit organizations. And again, that's filed online through the State Board of Accounts on the Indiana Gateway. And the final item is schedule an audit. And there's a little bit more in depth to this. So first of all, do you need to have an audit done? That depends. So there are a few reasons why you would need to have an audit done. The first is if you receive and expend. So if you are spending $750,000 or more of federal funds during the year, then there's a special kind of audit that you have to have done. And this audit is required by the Office of Management and Budget. It's called a single audit, an audit under the Uniform Compliance. And it combines the annual financial statement audit with additional testing of federal funds received. Okay, so if you get federal money during the year or in a prior year, and you're spending $750,000 or more during the year, you're going to have this special type of audit done. So not only do we look as auditors at the financial part of it, but we also look to see if the money is being spent for what it's supposed to be spent for. And there was a question earlier about the PPP loan. If you received a PPP loan, it does not count for this. So it does not count for the $750,000. If you received an EIDL loan, it does count for this. So I know several of you did receive PPP loans, so that does not count. One other thing to note that is if you get money from a state government entity and that money originally came from the federal government, that would count under the 750,000. So if you get government money, same way that we just talked about with the E1, if you fill out the E1 and the state says that you need to have an audit done, then that would require you to have an audit done. If you have a loan with a bank and the bank would require you to have an audit done, sometimes a review is fine, other times they don't care, but oftentimes if you have a loan with a bank, that might be a requirement to trigger an audit. Funding sources. There are several foundations in the area that require an organization in order to continue to receive grants, they must have an annual audit done. Board of directors sometimes require an audit to be done, or bylaws. So you'll want to check to see if you fall under any of those reasons. Other than that, it's really up to the organization as to whether they choose to have an audit done or not. I would say that if you have never had an audit done before, you might want to consider starting with a compilation or review and work your way up to an audit. A compilation, so there's pretty much three main level of services, assurance services that we provide in this area. Actually, the compilation is the lowest and we don't provide any assurance in this, but what we do there is we take your balances from your internal financials system and put them in a nice financial statement format. If there's any obvious errors, we will correct those, but that's pretty much all we do there. A review, we are going to take your numbers, see if they're reasonable. We're also going to compare with last year, why things went up and down, variances. We're going to do some inquiry with staff. And again, we're going to issue some financial statements. And then the audit obviously is the highest level of service, where we go in to make sure that your financial statements are in accordance with GAAP or the modified cash basis. We look at your policies, your procedures. We do not test internal controls, but we do have to gain an understanding of the policies, the controls that are in place. So again, if you haven't had an audit done in the past, you might want to consider starting with a compilation or review first. We do have some organizations where they may have an audit done every 3 years, or they may have an audit done whenever there's a new executive director, just to get that additional outside oversight to make sure things are being done properly. As far as responsibilities during an audit, you as the client, as the organization, the auditee, you are responsible for implementing proper internal controls, selecting the accounting principles, preventing and detecting fraud, complying with laws and regulations, and assuming management responsibilities. As an auditor, we have to be independent, so we can come in and make provide reasonable assurance, make an opinion on your financial statements. We have to establish an understanding of the services. There are specific auditing standards that we have to follow when we do audits. So we're not just coming in and making this all up. There are specific rules and regulations that we have to follow when we do an audit. Again, we have to consider internal controls. And then if we do find fraud, we would have to obviously talk to you about that, but that's not necessarily what we are coming in to look for. I think that's kind of a common misnomer, that when people think, okay, we're going to have an audit done to make sure we don't have any fraud. Yes, if there is fraud, we will definitely tell you about that, but that's not the main purpose of an audit. So that's kind of an overview there of the audits and whether you should have them or not. That's all. Susan, anything else to add on about scheduling an audit?
Well, not at scheduling an audit, but when you go back to the $750,000 for this, the amount for the single audit, just wanted to make sure that everyone knows that if you get a loan from the federal government, that is included in that $750,000 number every year. So if you have, and a lot of the loans that I can think of are HUD based, or there's probably others, but that definitely is included with anything else that you've gotten from the federal government in order to come up with whether or not you need to have that single audit. That was one of the things I was thinking about. I don't have too many any other questions, open questions as of right now.
I did want to respond to back on the question on the 1099s about not having an EIN. I was able to reach out to our payroll manager and ask about filing the 1099 if there's no social security. Like, for example, we have the individual's name, address, and amount, but we don't have the social security number or the EIN. She suggested that yes, the organization should file the 1099 with information that they have. And then in that case, it will put the liability on the recipient. So you don't have to, you're not required to have a W-9 to file a 1099. That's just the form that the IRS provides you to give to individuals to get the information needed for the 1099. So it's good practice to have them fill that out prior to payment so you can get that information. But if you can't get it, it's still your responsibility to file that 1099 with the information that you do have. Again, that's all the information that we have. I know it was a lot of different topics, but just kind of some different things that we think are important to consider either because we are approaching the end of the year. And again, some of those items should be done as of December 31st, while others are more applicable at the end of the fiscal year, whether it be June 30th or March 31st, whatever that is. Oh, we did have one question.
I have a new question.
Yep.
It's a couple of them now. How important is it for employees to fill out the new W-4 form before the end of 2020?
Well, then, so when you hire a new employee, they need to fill out the W-4 so you know how much to withhold from their paycheck. So if you hire a new person in 2020, they should be filling that form out before they get paid. So that way they know, so you know how much to have withheld. If you have other employees that have worked for you for years before 2020, you do not need to have them fill out the new form. They would only need to fill out the new form if they're making changes to their withholdings. And obviously you would want that filled out as soon as possible so that that change can be made in their payroll withholdings.
We also have everyone wants to know if the slides are going to be available after the presentation.
Yes, so we will email you out a copy of these slides. And then also, I know there were a few questions about the PPP loan that we will get answers to those as well and send those out as well.
And then one additional question regarding churches and the Form 990. They wanted to know about filing a 990. They may have to file and why a church may have to file a 990.
Okay, so churches are specifically, religious organizations are specifically exempt under IRS code. They do not have to file a 990. However, a church may have to file a 990T to report unrelated business income. So nonprofits are exempt from paying income tax. However, if a nonprofit organization has unrelated business income, so this is income that is not related to your mission, not related to your programming, it doesn't matter that this income is going back into the nonprofit to use for missions or programming, it's where it's coming from. So if you earn, raise, receive unrelated business income as a church, then you may have to file a 990T. And that is a separate form than a 990. So a church would not have to file a 990 because they are specifically exempt under the IRS rules. However, they may have to possibly file a 990T if they have unrelated business income. And then they would have to pay any taxes on that unrelated business income at the same corporate tax rate that other corporate for-profit entities have to. Obviously, the unrelated business income is reduced by any related expenses to that income. So it's not, if you have $5,000 of unrelated business income, any related expenses are going to offset that. There's also an additional $1,000 standard deduction that offsets that. And then you come down to your net income that we pay taxes on. So to your answer to your question, the 990 is not filed by a church. However, they may possibly file a 990T. Susan also mentioned an NP20. So when an organization, a nonprofit organization, initially gets started, they can file for sales tax exemption with the state of Indiana. And so when they purchase items, supplies, that type of thing for use in their programming, they do not have to pay sales tax on that. In order to keep that sales tax exemption, the form NP20 has to be filed each year with the state. Very simple form that just asks what the organization's name, address, mission, how long you've been in existence, and then your board of directors. That needs to be filed each year in order to maintain that sales tax exemption. So if a church has received a sales tax exemption with the state of Indiana, then you would need to file an NP20 with the state each year. All right, any other questions before we wrap up for today?
Are we going to be emailing the slides to the participants?
Yes. So we will email the slides to all of the participants. This last slide here has all of our email information. So if you'd like to contact us with any questions, we'd be happy to respond. We also have a blog specific to nonprofit entities on our website called Mission Minded. So It covers all kinds of topics, whether it be related to fundraising, board governance, new accounting standards, 990s, unrelated business income. So we like to provide information through there. We also each have LinkedIn profiles as well as a company LinkedIn. So if you are on LinkedIn, please connect with us that way as well. We're always here to answer any of your questions. We'd be happy to help in any way that we can. Great. And if there's no other questions at this time, I just want to thank everyone for attending. And again, we will follow up with an email to each of you with the slides and answers to some additional questions about that PPP loan. Thank you.
Thank you.